Master MACD strategy, buy low, sell high is easy. This MACD strategy about to show you is one of the highest win rate strategy you can make it in trading. It is very easy to use, works in almost every market, and most important, it makes money. Well, enough talk. Let's get straight into it.
The MACD or the Moving Average Convergence Divergence is one of the most popular technical indicators used by traders. Essentially, this indicator uses moving averages to find trends in market and is pretty good at it too. Now, if you are an experienced trader, you have probably used or heard about the MACD indicator before. But the MACD indicator by itself is just alright, to be honest. So make sure you watch this video to see how I pair it with some other indicators to make it perform much better. The MACD is made up of 4 different components: the MACD line, the signal line, the histogram, and the zero line. The MACD line, which is the blue line, in most cases is usually a 12 days moving average. The signal line, which is the orange line, is usually a 26-day moving average. Next, we have the histogram, which represents the difference between the MACD line and the signal line. So, for example, the smaller the space between the two lines, the smaller the histogram gets. The bigger the space, the bigger it gets. You can also see once the MACD line crosses above the signal line, the histogram turns green, and if the MACD line crosses below the signal line, it turns red. And finally, we have the zero line, which basically represents the center of the MACD indicator. Now that we know the 4 components, let's make sure we know how to use them. The MACD indicator is insanely good at finding trend in markets. How you can tell if a chart is about to have an upward trend is by looking for a cross upwards between the MACD line and the signal line. For example, here the MACD crosses above the signal line, indicating the chart is in upward momentum, and here the MACD crosses below the signal line, indicating it is in downward momentum. You can also use the histogram to indicate how much momentum there actually is. So, if the histogram is getting bigger, then means there is an increase in momentum. If it is getting smaller, there is a decrease in momentum. So, how you want to use this indicator is by when the lines cross upward, but only if they cross below the zero line. If they cross and it's above the zero line, you won't enter the trade. It's the same thing with shorting. You only enter a short trade if the lines are crossing downward and is above the zero line. So as you can see, this indicator is extremely easy to use. But the problem most traders encounter is that they use this indicator by itself. Let me tell you why this doesn't work. The MACD indicator works extremely well. The market is in a trend. For example here, the MACD indicator is doing a great job indicating when the price is about to move upward because the chart is in an upward trend. But here, the price is in a downward trend, but MACD is still signaling to buy long even though the price is going down. To fix this issue, for example, if we are trading long, we only want to trade if the market is in an uptrend. You never want to trade against the trend because the odds will always be against you. So an easy way to figure out if the market is in an uptrend, you simply just need to add a 200 days moving average. To do this, once we have the indicator added, you will just see a single line. If the price is above that line, the market is in an uptrend. If the price is below that line, the market is in a downtrend. So after learning that, we only want to buy when the market is in uptrend. If we are going long, of course, if we put all this together, we buy if the MACD lines cross below the zero line mark and the current price also above the 200-day moving average. This will guarantee that you are only trading when the market is in an uptrend, which is a very power combo. If you wanted to short, you would just do the exact opposite. Make sure the price is below the 200-day average and the MACD line are crossing downward above the zero line. So as an example, we would enter a long trade right here because the MACD line are crossing upward below the zero line and the current price is above the 200-day moving average. Now, what I like to do is set a stop loss below the 200-day moving average. So the 200-day almost act as a wall that the price has to break through to hit my stop loss. Then I like to have a 1.5 profit ratio for my profit target mark. So as you can see for this example, the strategy worked exactly as we wanted it to, and we made money. But we can still make this trading strategy even better. This MACD strategy combined with a 200-day moving average works extremely well only if there is a lot of price momentum. Where the strategy start to get kind of false signal is when the chart start going sideways and losing momentum. So as you can see here, the chart is moving sideways and lost almost all of its upward momentum, and the MACD is giving loss of false signal. If you traded here, are you probably lost money? To fix this issue, we have to combine the MACD with price action. To do this, identify a key support or resistance where price hit and bounces. So what you would do is make sure the price above the 200-day moving average. Once the price hits the support, wait for the lines on the MACD to cross below the zero line, and that's when you enter the trade.
Hope you guys learned something from this video. Like and subscribe me. I will see you guys next time.